This is the Captain Ngala. Today is another new day that the Lord has given unto us. Today we want to talk about some simple analysis, and we want to talk about 6 things to consider before entering into a market to trade. See, 6 things you have to consider, or you have to put into a place for you to consider whether you want to enter that market or not. Without wasting time, we want to just to go straight to the analysis so that you can see what I'm talking about. Today we are going to look at 6 things. 6 things. I will type 6 things to consider. Before taking a trade. Let us put it that way. Before taking a trade, guys, your mentors will never show you this, because in forex you will get a lot of knowledge, you get a lot of information, but you don't know which information to trust. You can use a given idea you got online, but that idea has just been giving you losses, and some people are just here to waste your time. Now you have to consider, or you have to check whom do you want to listen to, or whom do you want to use the strategy. Whose strategies do you want to use? Because some people are just there online to waste your time, posting nonsense on YouTube. Now let us get back to the video. The first thing we want to look about is descending, the first factor. It is called the descending chart analysis. Yes, this is the first factor we want to talk about. Now, when I talk about descending chart analysis, is like this is what I mean. Descending chart analysis, I want you to confirm. Start analyzing the market from a higher time frame. From a higher time frame, in this case, I want to talk about the higher time frame. I want you to start from is the monthly. Let us start from the monthly. You start from the monthly. You go to the weekly analysis. You go to the daily. You go to the hour. Then you go to even up to 30 minutes. Are all these things confirming? Because what happens in the lower time frame is it is what is reflected in the higher time frame. Now you have to do what we call a descending chart analysis. You have to chart to the higher time frame when you are analyzing your market, to the lower time frame. That one is what I'm talking about, guys. You do a descending chart analysis. When I talk about a descending chart analysis, what should you consider? First thing, you use a trend line. Use a trend line. Use a trend line. Guys, I've been mentioning how to analyze market through trend lines. If you haven't watched my videos, you just go and watch, because today we don't want to make this video very long. Another thing is spot key zones. Spot key zones. I talked about this. When you talk about key zones are the draw your support, draw your resistance, check the resistance, check your support. Are they conforming? What is in the monthly time frame? What is in the hourly time frame? Check about that. Check your zone, draw your support and resistance. Use a trend line for you to gather the information about the price movement in that given market. The next thing under the descending chart analysis I want you to check is to spot any patterns. Spot any patterns. So guys, for you to make some serious analysis, you have to spot your patterns. You have to spot your patterns. You have to spot any pattern which is in the chart analysis. Kindly check. which pattern are you seeing in the monthly time frame? Which pattern are you seeing in the weekly time frame? Are they conforming? That is what I'm talking about. Are they conforming? Another thing I want to talk about, use moving average. And I even taught you about how to use moving average. Use moving average. Mostly, I always use exponential moving average. That one is the EMA. And mostly I use two EMAs. I use the 200 EMA, and what will the 200 EMA indicate for you? 200 in the EMA always indicates the direction of the market. I had already explained this. Indicate the direction of the market. Watch my previous video, you will see that I had already explained. Use 20 EMA. Use 20 EMA. 20 EMA will give you entry into the market. Mostly it signifies strength also. It gives you entry and also signifies the strength in that given market. The next thing I want you to check under the analysis, the analysis. The second thing I want you to check is the candlestick patterns. Kindly check the candlestick patterns. I don't want to use a lot of English because I'm somebody who love putting something very realistic and very simple. Mostly use candlestick. Check on the candlestick patterns. What are the candles forming? Because we have different candles showing different momentums in the market. They are the candles which are showing the bullish momentum in the market. They are candles showing a reversal in the market. They are candles showing indecisions in the market, which means the buyers are not sure whether to. Both the buyers and the sellers have not decided on what to do. Then there are candles which also indicate the bearish momentum in the market. Those analysis of the candlestick pattern, I already did it in my previous video. You can go and check it out because I want just to make forex very, 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 very simple. Anybody can trade forex even after 3 days of watching these videos. You can trade forex. Then, because I don't want to waste time, the next thing I want you to check out is the note down the, you have to check, not the profit you wanna take, note down the profits taken to take. Guys, this is very important. If you note down the profits you want to take in a given trade, it will help you, or it will prevent you from over trading in that given market. It is something very important and very key in forex trading. If you note down the profits you want to take in that given market, it will be very simple for you to avoid over trading and also avoid you have a proper risk management in that given trade. By noting noting the profit to take in that given market or that given trade, you also know where to take put your stop loss. Then there's something we call know when to exit the market. Know when to exit the market when it has broken the structure. When it has broken the structure. Know when the market to exit the market when it has broken the structure. Guys, this is it. I always advise you, because not all not that not all analysis are not 99 100% correct. Maybe the market can break structure, or the market cannot, maybe can go against you. But when do you exit this market? Because you can have an account which does not hold that given those given drawdowns. Drawdowns is the movement, like when the market goes against you, is the loss you are incurring in a particular trade. Now know when to exit that given trade. But I always advise you, when you see the market has gone 50 pips against you, that market has broken the structure, kindly exit that market now. You get out of that trade. Then the next thing I want you to talk about is the at the account. Look at the account balance. This is what is it, guys? Having a given account balance, or a trading account, or trading capital, is very important, because I can give you a trade, or I can give you a signal, and you know how to enter that given trade. But you enter with the account which is very small, and with some bigger lot size, and in return you will get that your account might not even hold the drawbacks or the pullbacks in that given market, and thus you will be kicked out, or you'll be stepped out on that given trade. Now it is very important. Check out, note down, is my account able to hold a given pullback in this market? That's why I've been telling guys that always have good account balance, which is able to hold some pullbacks on the given market. Guys, as you can see, uh, uh, this is a market. If you consider all these factors I've given you, and you start analyzing this market, you are going to have a very, very simple task. You are going to have a very, very simple task in analyzing this given market. It will be very simple, because you won't have some serious issues in marketing, because in analyzing this market, because you'll be you'll be going step by step with what I've given you, and you confirm what is the market saying in the higher time frame, and what is it indicating in the lower time frame. Are they confirming? Is my analysis confirming the higher and the lower? Then I had already told you that a market entry, you enter a market in the lower time frame, but you analysis should start with the higher time frame. Thank you, guys. The next video we are going to analyze our market with all these factors I've given you. Thank you, and God bless you.